Are you ready to start making your money work for you, but don't think you have enough to start investing? Well, you might be surprised to learn that you can start investing with little money. In this video, I'm going to show you 7 easy ways to start investing today. Hi there, welcome to the Idea Island. Whether you're a beginner or a seasoned saver, these tips will help you turn your small investments into big gains. Number 1. Invest in an online savings account. Investing in an online savings account is a great option for people with little money to start building wealth. These accounts are typically offered by online banks and offer a higher interest rate than traditional savings accounts at brick-and-mortar banks. Online savings accounts also have lower fees and provide easy access to your account. Additionally, they require as little as $10 or $25 to start and are a low-risk way to start earning interest on your money. Online savings accounts are FDIC insured, which means that your money is insured up to a certain amount by the government, making it a safe place to store your money. They also provide a great way to start earning compound interest, which is interest earned on interest, allowing your money to grow exponentially over time. Number 2. Consider opening a Roth IRA. A Roth IRA is a great way for people with little money to start saving for retirement. It's a type of individual retirement account that allows for tax-free contributions and withdrawals, providing a flexible and tax-efficient way to save for retirement. The investment requirements are often quite low, making it accessible for many people. One of the main benefits of a Roth IRA is that contributions are made with after-tax dollars, meaning that any earnings on the account grow tax-free and can be withdrawn tax-free in retirement. Additionally, there are no age restrictions on contributions and it does not have mandatory minimum distribution requirements. The contribution limit is usually around $6,000 for those under age 50, and $7,000 for those age 50 and over, and it can change from year to year based on income. Number 3. Take advantage of fractional shares. Taking advantage of fractional shares allows investors to purchase a smaller portion of a stock, rather than having to buy a whole share. This can be beneficial for investors with little money to invest, as it allows them to participate in the stock market with a smaller investment. Typically, the minimum investment required to buy a stock is the price of one full share, and this can be a barrier for many small investors. However, with fractional shares, they can invest in a stock by buying a portion of a share, often with as little as $5. By buying a fractional share, small investors can diversify their portfolio and own a piece of a variety of companies, instead of having to concentrate their money in one stock. This can help to reduce risk by spreading it across different companies and industries. Moreover, by buying fractional shares, small investors can participate in the stock market with a smaller investment and invest in a larger variety of companies. They can also take advantage of compounding returns by reinvesting dividends. Number 4. Invest in ETFs or mutual funds. Investing in ETFs, exchange-traded funds, or mutual funds can be a great option for people with little money to invest, as they allow you to invest in a diversified portfolio of stocks, bonds, and other assets with a small investment. ETFs are investment funds traded on stock exchanges like stocks. They can hold a variety of assets such as stocks, bonds, commodities, and currencies. Mutual funds, on the other hand, pool money from multiple investors to buy a diversified portfolio of stocks, bonds, or other assets, and their value is determined by the net asset value of the underlying securities. The benefits of investing in ETFs or mutual funds is that they offer instant diversification with a small investment, which can help reduce risk by spreading it across different types of assets. They also have lower minimum investment requirements than other types of investments such as individual stocks, often as low as $50. Additionally, they are professionally managed, which means that a fund manager is responsible for research, analysis, and trading, making it a good option for those who lack the time, expertise, or interest to pick individual stocks. Number 5. Invest in real estate. Investing in real estate through REITs or crowdfunding can be a great way for people with little money to invest in real estate. REITs are publicly traded companies that own, operate, or finance real estate and can be a great way for small investors to invest in a diversified portfolio of properties. REITs can be bought and sold like stocks through a brokerage account and often have low minimum investment requirements, as low as one share price. Crowdfunding, on the other hand, is a newer way of investing in real estate which allows investors to pool their money together to invest in a property. They can invest small amounts, often as low as $500, and get a percentage of the returns on that property, without actually buying or managing it. Both REITs and crowdfunding offer diversification and professional management, which can help reduce the risk associated with real estate investments. It's important to keep in mind that both options come with risks, and it's important to do your research, consult with a financial professional and understand the potential returns and risks before making any investment decisions. Number 6. Look into peer-to-peer lending. P2P lending is a type of investment where borrowers and lenders are matched directly, bypassing traditional financial institutions. With as little as $25, people can open an account with a P2P lending platform and start browsing the loans available. These loans can be for personal or business purposes, and you can filter them by creditworthiness, loan term, and interest rate. Once you have found a loan that you want to invest in, you can invest as little as $25, or even less depending on the platform. Your investment will be used to fund the loan, and you will receive interest payments from the borrower as they make their loan payments. It allows you to invest in a diversified portfolio of loans, which helps in reducing the risk, and many P2P lending platforms typically perform thorough credit checks on borrowers so you can invest with the confidence that you are lending to a credit-worthy borrower. However, it's important to understand that P2P lending also carries its own set of risks, such as default risk and interest rate risk, and it's important to understand the risks and potential returns before making any investment decisions. Consult with a financial professional and do your research before investing. Number 7. Invest in yourself. Investing in yourself can be a great way to build your skills and increase your earning potential, even if you have little money to start with. One way you can do this is to look for free or low-cost online education and training to learn new skills. Libraries also offer free access to online learning platforms and educational resources. Another way is to attend free or low-cost networking events in your industry. This can help you make new contacts and learn about job opportunities. Focusing on personal development by read books, listen to podcasts and attend seminars on personal development topics. This can help you improve your mindset, productivity and focus. Remember that investing in yourself isn't only about earning more money, it's also about developing the skills and knowledge that will help you achieve your goals, whatever they may be. It's about making yourself more valuable and setting yourself up for success in the long run. Investing with little money doesn't have to be daunting or impossible. From online savings accounts, to ETFs, to investing in yourself, there are many ways to start building your wealth. Remember, the key is to start small and be consistent. With time, you'll be able to build a diversified portfolio with even more ways to grow your wealth. Thanks for watching, I appreciate your support. By subscribing, you'll be helping me continue creating valuable content to help you reach your goals. Let's continue this journey together. Thanks and see you in the next video.